moderator and discussant for the next session. Keith, I think we've got most people on.
Okay, I see Charles Latha is Aimable here.
Yes, sir.
No,
Yeah, I think. Can you hear me, Keith?
Yeah.
I can hear. Yes, I can hear you,
Yeah.
Latha.
Yeah.
Okay. I was just wondering. I wanted to start with Dr. Nsabimana if he is available.
I did send him an email. It doesn't look like he's joined yet. I will follow up again. I do apologize about that.
Okay, that's good. Maybe we can start then with Chuck Moss. Anyway, this next session is about measuring impacts of policy change. So one of the major goals of this consortium project was to see about measuring these impacts and how we can do it. And what we have here are 3 case studies, 2 of them from Rwanda and 1 from Kenya. And we'll start with the a case study by Chuck Moss on Rwanda, looking at the persistent impacts of USAID projects. But let me first just tell you a little bit about Chuck. I think most of you maybe know him, or if you were on the call yesterday, you saw him there. But he's a professor in the Department of Food and Resource Economics at the University of Florida, and works very extensively on well, really a wide variety of topics. But he's probably best known for his work on agricultural finance and agricultural policy analysis. Chuck, let me turn it over to you. Chuck, we can't hear you. Are you on mute?
There we go. Okay, hear me now?
Yes, good.
Okay. When I started working with coffee in Rwanda, one of the reasons Jim and I spoke is that I spent a lot of time in the late 90s and early 2000s working on coffee in Mexico. So one of the ideas is knowing quite a bit about the Mexican industry. Transitioning to Rwanda, the first thing that I worked on in Rwanda was the valuation of spread pearl. And this valuation is consistent with the USAID's idea of evidence-based policy. I think maybe it might not be overstating, Jim can thump me in the head. We found spread and its predecessor to be fairly successful. But what happens is most good policies have to come to an end, and spread closed out in 2011. This kind of gave us a natural experiment. And the experiment was that after the policy intervention had ended, did it change the effect of say, the policy or the history of policy, the mechanics on the industry that was the focus? And okay, here one of the ideas, we went back to Rwanda with Weatherspoon, I think it was 2014, and we talked to the coffee washing station managers and said, well, how's it going? And of course they said, well, it's not near as good as it used to be. And one of the ideas was they used to send trucks out to villages to gather the cherry coffee. And they had kind of slipped into what in Mexico we call the coyotes. So they would, independent entrepreneurs or arbiters would gather coffee from the villages and bring it to the coffee washing station. And that raises potential problems with the valuation of coffee in the supply chain. So our basic question was, okay, spread ended. Did the profitability of coffee change once spread ended? So to do this, we were interested in estimating a farm income relationship. Now, the farm income relationship, what's particularly kind of novel is this last term, probability C times CL. So that's the probability that the farm produces coffee times the level of coffee produced. So it's the expectation of coffee production at the farm level. Okay, so the idea about the probability function is that it's a one-sided event. We have a lumping, if you will, at 0. So one of the kind of classic ways to do the lumping is to fit a probit model. So we fit the probit model in equation 2, where distance is the distance to the market. And then we fit the level of coffee sold model in equation 3. And the level of coffee sold model in equation 3 has a term called the inverse Mills ratio that reduces the bias in the estimation because of this one-sided or selectivity bias. Okay, so when we estimated the probability function, this is, what can you say? I haven't seen that many 3 stars in a long time. Kind of caused me to check my code and make sure that I have my code right. So then we wanted to estimate the value, the level of coffee production. And it has the inverse Mills ratio at the next line to the bottom. So estimating the inverse Mills ratio, or estimating the coffee production equation, a huge problem is that the residuals are non-normal. They are positively skewed and positively kurtotic, or excess kurtosis. So, I've done this before. One of my articles in '93 with Schunkweiler involved using an inverse hyperbolic sine to correct for skewness and kurtosis. So we estimated the coffee production correcting for skewness and kurtosis using the inverse Mills ratio, and basically statistically we would fail to reject the non-normality. The theta parameter controls kurtosis predominantly. The delta parameter controls skewness. So, maybe more kurtosis than skewness, but kurtosis and skewness are both joint effects of both of the parameters. So, a little bit on that maybe in the future. So then the question is we're going to estimate the impact of coffee production on agricultural income, okay, using the expected coffee term, the inverse Mills ratio times the level of coffee. And again, agricultural income tends to be very kurtotic and positively skewed. So we use it, again, relying on the inverse hyperbolic sine transformation. So this is basically the take-home slide. So EICV 3, 13, 14, EICV 4, 16, 17, and the last one, EICV 5. So in both cases, EICV 3 and EICV 4, we have that growing coffee is positive and statistically significant. So the evidence is that we do have persistence, that just because the coffee program spread pearl ended, it doesn't look like the wheels came off the bus in the supply chain for coffee. Now, one problem is EICV 5, and some side research says that the lack of a positive and statistically effective EICV 5 may be a rise of something called the potato taste defect in the coffee production in that marketing year. So, maybe trying to track that one down has been somewhat problematic. Now, let me tell you that about the estimation is that these parameters are estimated sequentially, not simultaneously. So therefore, the idea is that the parameters themselves may not be as efficiently estimated. We've corrected for bias using kind of a second or side approach. The holdup in this problem has been trying to adapt what's referred to as a double hurdle model, adding a third equation and accounting for the simultaneity between the selection equation and the measure equation. I have burnt many a CPU hour on this one trying to get it to solve. So one of the questions on this research, and I will email out my numerous co-authors that have been involved in various stages of this work, is do we let the great be the enemy of the good? You know, is it time to send this paper off and let me work the rest of the year on trying to get the simultaneous estimation? Like I said, the results are not biased, they're inefficient. Okay, and at this, I think I will pass it back to Keith.
Okay, well, let's maybe in the discussion we can come back a little bit to this work. I would have actually liked to have seen a little bit more discussion on, you know, what the basic hypothesis was. I think that wasn't really clear to me. But let's see if we have time at the end. Now, do we have Aimable? Did we find him?
I don't think so yet, Keith. I think we're working on it. Is that right, Mackenzie?
Yeah, I don't see him in the chat, in the attendee list yet. So as soon as I see him, we have emailed him a few times. So again, I apologize.
Okay, well, we'll go to the a second case study. This one's from Kenya on seed policy, and there are two authors to this case study. There's Latha Nagarajan. She's the and Anwar Nasim. Now, Latha is the director of the Soils Consortium at the International Fertilizer Development Center, IFDC, and she had previous positions at Rutgers University, IFPRI, and she works a lot on project evaluation, technology adoption, input markets, and policy research, and has a PhD in my alma mater of applied economics at University of Minnesota. Her co-author is Anwar Nasim, who's he's actually the project manager at Rutgers for the Feed the Future Policy Research Consortium, and he's also associate research professor there, and so he's probably well known to everybody here. So Latha, I think you're making the presentation. Please take it forward.
Thank you so much, Keith, for your nice introduction about us and my co-authors. I have some issues in uploading my slides or sharing my screen. Slides, I don't know, it gives me several options. I don't know, kind of a little bit. Carl, do you have the slides, Anwar? I think I shared with you.
Did you send them this morning? Yeah.
Yes, yes. I have some issues in sharing this.
Yeah, I have it. Let me just.
Okay. Thank you, Anwar. Thank you, Anwar. Yeah, that'll be great if you can. Yeah. Okay. Sorry about it. Okay, great. Yeah, thank you so much, Anwar. Good morning, all, and I would like to share a brief summary on seed policies and its impact in sub-Saharan Africa, going beyond Kenya, I would say, which Carl, Anwar, and I have been working through the Rutgers Consortium work. We've been documenting policy change in certain countries. We've been following few countries and then documenting the effect of seed policy change in few countries in sub-Saharan Africa, and also specifically across cross-country studies also we have been documenting. Second slide. Yeah. In general, how did we end up measuring the seed policy change? In general, the impact of seed policies or any policies associated with agri-inputs use are measured through its adoption at different scales. During the early stages of any policy implementation, one can get a snapshot of certain policy outcomes measured through certain quantitative and qualitative indicators. In recent years in sub-Saharan Africa, especially progress has been made to track and measure any factors that are related to enabling environment and especially affecting seed industry at the national level. Here I mean the efforts made through the African Seed Access Index, Enabling Business for Agriculture, and Access to Seed Index. And these are some of the indicators and concerted efforts taken by the donor investments also have been happening in tracking certain key indicators that influence the enabling environment. So during the early stages of any policy implementation, these can be easily measured using the supply side indicators. Example, the number of private seed firms in a country level, or how it has improved, how the dealer supply network has improved, or how much use of the improved varieties have been sold in a country in terms of the value and quantity. And these are supply side indicators that can give us a snapshot. But at later and advanced stages of the policy impacts can be captured over years, mainly through adoption and then welfare, comparing with any baseline or using counterfactuals if sufficient data is available. Next slide. But capturing the impacts of any policy change, both in early or advanced stages, gives us generate valuable lessons for scaling and replication. Here, there are many components to what constitutes a seed policy. This suggests different points for policy interventions to generate desired development outcomes. For example, investment in public R&D investments in agriculture, or specifically any investments made to improve crop breeding or early generation seeds. That is expected to have a desired outcome of improved varietal releases from the research systems. Any policy to strengthen regulations or seed quality aspects is expected to have a substantial impact on better products availability and also less fake seeds in the market. Next slide, please. For example, in sub-Saharan Africa, when you say that liberalizing the seed market, this is one policy reform which ended in deregulation of parastatals and opening up the competition for private sector to enter and allow many firms to enter the market. So you can clearly see the trend in the growth of the private firms that are engaged in maize seed production increased substantially from mid-1990s, started with the structural adjustment policies, and as many national governments started liberalizing their input markets, the firms engaged in seed production also have improved quite a bit. So in the next few slides, I will be providing examples of the countries that have undertaken specific seed policy reforms and also have resulted in substantial impacts. Next slide, please. In Zambia, Zambia has been leading the seed policy reforms from mid-1990s. They undertook a series of seed policy reforms that started with opening the market for private firms, both in R&D and marketing, and also strengthened seed quality mechanisms and seed standards closer to truthful labeling and everything. And also the export policies encouraging seed exports within Africa, sub-Saharan Africa, and besides building a strong seed infrastructure. This resulted in increased varietal releases for adoption, and Zambia stands #1 in export of maize seeds in the recent years. Next slide, please. Another example which we have been closely following is seed policy reforms undertaken in Ethiopia. As you know, Ethiopian market has been heavily controlled by government throughout the value chain, seed value chain. But there are few major policy interventions undertaken by the government in the recent years and has resulted in major impacts on productivity levels. For example, in the recent years, realizing the decline in yields in maize with age of the varieties, and also to capitalize the benefits of new climate resilient cultivars through DTMA, the drought tolerant maize in Africa, which suits mid to higher altitudes. Conscious policy decision was taken by the Ethiopian government to phase out the old cultivars in terms of seed production, as well as dissemination and promoting new cultivars. Another major impact in the recent years, one can see, especially reflected in Ethiopian productivity levels, is the policy on expanding the production and distribution to last mile by allowing direct seed marketing since 2011. So direct seed marketing is one single policy effort that really enhanced seed availability and also improved crop yields and commercialization in Ethiopia. The recent impact evaluation studies done through IFPRI clearly indicates that DSM approach, that is direct seed marketing, led to a 26% increase in maize yield, and also maize harvest sold by the Ethiopian households. Also, it improved overall seed availability for other crops, other crops like wheat and teff also. Next slide, please. In the case of Kenya, the policies associated with seeds and other complementary inputs started with their economic liberalization efforts in mid-90s. Kenya, like Zambia, also invested in building strong infrastructure in terms of regulatory reforms, ending the monopoly by Kenya Seed Company, allowing the private firms, and also liberalized the complementary inputs like fertilizer market, and increase the input supply networks in terms of agro-dealer development programs and everything. But these have resulted in adoption of improved varieties of maize, more than 70% adoption, as you can see in the slide, in the graph, with more than 200 varieties of maize cultivars available for the farmers to plant. One other major reform undertaken by Kenya was IP protection, the intellectual property protection. This was primarily driven by their horticultural exports, but also benefited and spillover benefits and offered some protection to private firms engaged in research in Kenya. This has been validated through our empirical estimates using Kenya maize yields and varietal yields. However, one can see in the case of Kenya, there is a slight disconnect between the yield gains, that is, versus the intensity of cultivar releases. Though adoption is higher, the varietal turnover is poor, or still the older varieties dominate, especially in the high potential maize growing regions of Kenya. New varieties in those areas offers small yield advantages, but one can see that this came out of our analytical or empirical research in Kenya. But of late, more new maize hybrids with high yield potentials for highlands are also being introduced recently by the private seed companies, and also new firms entering the maize seed market with drought-tolerant traits offering comparative yield advantages in like especially in the dryland areas of Kenya. That's what the recent CIMMET surveys also have documented these effects. Next slide, please. So in addition to looking at the impacts of the policy change at the country level, we also carried out cross-country studies to investigate if any specific seed policy or policy reforms are associated with increased productivity levels. For this purpose, we took advantage of the data collected by the African Seed Access Index. The African Seed Access Index tracks and measures and compare indicators on enabling environment since 2016. They have so far collected data, especially for 13 countries in sub-Saharan Africa, on different indicators, starting from research and development, seed industry competition, and then other seed reform policies. Some of them are qualitative and some of them are quantitative indicators. And these provide us a kind of, the data has been started across these countries only 2016 onwards. So we use the data indicators from TASAI on enabling environment, or if the enabling environment are associated with increased yields. Our preliminary data analysis shows that the higher yields for maize in sub-Saharan Africa across these 13 countries are associated with the number of varieties released, and also any efforts taken by the individual governments to stamp out fake seeds or counterfeiting. It is important that the fake seed is more prevalent than one can expect, I would say that, because most cases are not reported. And in most of the countries, there is no central authority tracking fake seeds. Main sources include traders, seed companies, and mostly unknown. And there are no harsh penalties also associated with fake seeds. The reason is, this came out very strongly, is basically there is a fine line between poor quality and fake seeds, especially when NGOs and government are the main market for seeds in many of these countries. So our results also validate that. And besides that, varietal age also associated with higher yields. But again, older cultivars still dominate the system with some effect or impact on yields. Next slide, please. So one can see that the policy that has had an impact on farmers' yield is the development and adoption of the new varieties, happened through public R&D investment in sub-Saharan Africa over years. Keith, in his paper in 2016, provided a strong empirical evidence on the spread of improved varieties on crop yields across sub-Saharan Africa comparing the data through 1970 to 2010. So there are certain impacts on productivity levels through the adoption of improved maize varieties. And we also could clearly show that, comparing 1995 to 2014, you can see that the adoption of improved varieties for most of the countries have improved. And we can see many countries have also improve their yields substantially. Next slide, please. To conclude that measuring the impacts of specific seed policy changes have been more difficult, especially in sub-Saharan African context, because of data availability and limited data availability, one could say. But we were able to show that consistently that ending government monopolies on R&D and seed, and also the support of private seed firms entry in terms of increase in the number of companies or have some effects on increased yields. That has been shown in Zambia, Ethiopia, and Kenya, and on the whole in sub-Saharan Africa from the emerging data evidence. Public research investment is still responsible and for the spread of new varieties and has increased the productivity and continue to do so. Next slide, please. Just would like to show the kind of outputs generated from our work through that is Rutgers Policy Consortium. And these are our contributions and the outputs generated from our work. I would like to thank Professors Carl Prey and Anwar Nazim, and also Jim Emke and Biniam for their continued support. Thank you very much.
Thank you very much, Latha. We can come back to that. I noticed Jim had a couple of questions in the chat, or in the Q&A, I should say. Maybe you could take a look at those, and we can come back to that in a minute. Do we have the Aimable?
Unfortunately not. I did hear from Aimable on WhatsApp, and apparently he was called into some meeting with a minister, so no doubt talking about our great work. Unfortunately, he won't be able to join. He said he might be able to join later. So maybe what I suggest is that we have a discussion on these two papers, and I can give a synopsis of the paper because I was an author on that later if he's not able to come. But I would prefer that he present it, obviously. So, I mean, that's just a suggestion. I don't know how you want to put it.
Yeah, no, that's fine. That sounds great, Anwar. That'd be great. So let's take a few minutes to have a discussion around what we've heard, and maybe we can start with the last first, because that's generated a little bit of discussion in the Q&A. Latha, I don't know if you've had a chance to look at those questions, but yeah. Could you refer to the question, and then you know, so that everyone else can know what that is, and then comment on it?
Sure. Thank you, Keith. I would try to answer the question, and Carl and Anwar can chip in. Jim has asked a question, Latha, why are governments, NGOs buying fake and poor quality seed? What is the farmer reaction to these organizations after the distribution of fake and poor seeds? Jim, that's a very valid question. I just would like to give you a quick example in the case of Kenya itself. Why are governments and NGOs buying fake and poor quality seed? In the case of Kenya, repeatedly, Kenya Seed Company is the only company that is even allowed to bid for mass distribution, especially the relief seed distribution. Not many companies, many private companies or other organizations are involved, even bidding. So in this case, you know, whatever Kenya Seed Company, the parastatal says, basically goes. And again, you know, in many of these cases, they don't produce seeds for relief seeds or anything, but what happens is, especially this happens, especially in relief seed distribution cases, because they don't plan there is no advanced planning to even produce and distribute seeds for the relief seed, or distributing seeds through relief seed mechanism. And I think I answered this question. Carl or Anwar, do you have anything else to add?
Well, just the point that, just to continue what you said, since they often don't prepare for you know, to provide relief seed, why then they go out into the market and buy whatever is available, and as a result, you know, they may buy it from other companies, or are they, some company, some NGOs and others actually just buy grain and then treat it and sell it, right? Latha?
Yeah. The other question, Kenya, yes, I agree that that's the next policy. I think I really expect, I don't know, we really would like Kenya to adopt, like Ethiopia did, phasing out old cultivars and then bringing new cultivars. I think that would add value to the Kenyan reform process also. And then in Kenya, it will be much more dynamic compared to Ethiopia, especially in terms of the dissemination and adoption, because of the presence of more private sector, especially in the high potential areas, and also in dry lands and other in the especially in the dry land and dry land parts of Kenya. Also, it's much more dynamic. The seed market is much more dynamic, and one would expect, much wider impact, I would say, in Kenya. Yeah, especially, I really hope, that will have some impact on yields, because the maize yields, it's pathetically low compared to any others in the region, though they have a whole suite of varieties available in the market, or available.
Yeah, well, this does raise, an interesting question. So you have Kenya, a lot of varieties, lots of private sector varieties being released, but not much adoption. That still seems to be dominated by a few older varieties from the state sector, and as you mentioned, no yield gains for the last. No effective, really significant yield gains for the last several decades. So, I guess it kind of raises the question to me is, how are these private companies staying in business if they don't have any sales?
Yeah, absolutely. That's why, in one way, I would say that, the market leadership helps, because some companies like, Western Seed means, they concentrate on only in certain parts, and then they have one or two varieties that still dominate. They try to, work through this market leadership. Kenya Seed Company, Aristotle, still dominates the market, though the share has been declining from as high as 90+%. Now it's around 75% or something. But even then, they have this one single hybrid that really suits the highlands. And also the price. They undercut the price, especially in those highlands. In a way, I would say that an indirect subsidy is offered to them. So in that way, they still dominate the market. Yep. Yeah.
I think the other thing, Keith, I think it's more like down to 60%, isn't it? That Kenya Seed provides this is just maize we're talking about, right?
Yeah.
It's maize. And the other point is that that these drought-tolerant varieties that are coming out of CIMMYT and the national program and are sort of being distributed through AATF are starting to go out in the drier land, lowlands and dry lands. So they're not competing so much directly with the Kenya Seed Company. They're more pushing into those lower lands, and of course those lower lands have very low, in general, have low yields, and so it hasn't really shown up in the aggregate yields for the whole country yet.
Yeah,
Although
absolutely.
I suspect in those dry lands there's some impact going on, and maybe it's not just impact in terms of yields, but also it's spreading into areas where they didn't really, they only grew minimal amounts of maize that were enough to feed their own family, and they didn't do anything besides that.
Yeah.
So there is some movement, and some of the companies are making some money, but not not huge money.
Absolutely, yeah. Seedco, I would say that they have come up with a couple of good varieties, especially for the dry lands, and yeah, they are gaining. It's gaining momentum, especially the eastern and northeastern parts of Kenya. Yeah, with the yield advantages too. Yeah.
Well, no, very interesting, and I'm glad you kind of were able to work in some comparative analysis to what's going on in Zambia and Ethiopia, because I mean, Ethiopia is clearly an area where we have seen very significant yield gains, significant impact of new varieties, and but my impression is that it's still pretty much a state-led enterprise rather than a private-led enterprise, at least in maize.
Absolutely, absolutely. Only Pioneer is the only company still. It's there from mid-90s. Whether, but again,
yeah, and in close cooperation with the government ministry.
Absolutely, absolutely, and even through the donor programs like USAID programs and stuff. Yeah, Pioneer has been. Yeah.
The latest numbers we've seen from Summit seem to indicate that might be about 10% of the areas, or is it area or sales, are Pioneer.
Yes, 12%. Yeah, that's right. Yeah.
Okay, thanks. Well, I wanted to also go back to Chuck's paper, if I could. Thank you very much, Latha. Maybe we can come back again to that.
Sure.
But while, Chuck, are you still around? I was wondering if you could just give a little bit more background on the experimental design. I mean, not the statistical properties, but what is it? So basically, you're coming several years later after a project has been in an area, and you're trying to see what impact of the project may have persisted in terms of, did it increase coffee production? Did it increase farm income?
Yeah.
What was the basic experimental design here in terms of what's the control?
Yeah, the primary idea is this beta 11. So I have beta 11, which is the impact of the probabilistic coffee production on farm income. So if the project ends and it persists, then beta 11 should persist. So that coefficient should remain positive and statistically significant after the end of the project. So when we estimate the effect, EICV3 is after the end of the project, and we're still getting 238.16 Rwandan francs per unit of production. Okay. EICV4, the next sample frame, I think is 1516, and it remains 119.72. Now, a couple points about it. So coffee production is still statistically, positive. It makes money. Now, the comparing the two, there has been a relative decline in the profitability between EICV3 and EICV4. And that decline is statistically significant. So maybe some ferreting out about how much of that decline is explained by a world change in the coffee price, because other than the Rwandan coffee price change, the global coffee prices change. But going back to the statistical, I think I pointed out in one of the questions online, my estimates are unbiased, but they're inefficient. Also,
but Chuck, what is the difference between between these two things? I mean, I don't understand, what you're measuring here.
The coffee program, the spread impact, the intervention ended with EICV3.
So what is EICV3? Is that based on a survey of farmers before the end of the project?
That's a Rwandan survey of, I think, 11-12. 2011,
okay, so that's
2012. So that's while spread was winding down. So we still have spread. 2014 is 3 years later, after EICV, after the spread program has left. So what we want to know is, was there a change in the profitability for the farmers after the program ended? So if there was no change in the profitability to farmers, we would conclude that the program was, or that the intervention was resilient. We don't have to have the intervention for the farmers to continue to gain some benefit from the changes made in the coffee supply chain. So while we find that they're still making money on coffee, that there is a decline. Now, the degree to which that decline is statistically significant and attributed to other factors is, yes, needs some additional parameterization.
So we're not able to say from this analysis, all we can say is that they were in this particular year of this second survey, they were making less money from coffee.
Right,
but we don't know if that's because world prices were lower, their yields were lower, or they were less productive.
Well, it's hard to ferret that out. If I could combine the two, if I can estimate the 2 years simultaneously, I might be able to ferret some of that out. But like I said, the EICV5 appears to be wasted on a potato taste defect. So I just don't, maybe it's just out there somewhere. It doesn't work very well. So yes.
Well, let me ask you about your yield impact, or your yield variable. I mean, the one right above expected coffee production. It looks like that in the second year, they're making a lot higher yields.
No, that's yield from all crops. That's more than coffee.
Do you have any information on what the yield of coffee was and what the price was between these two periods?
I have some information about the yield on coffee. Most of that is in the coffee production equation. So I haven't put all the coefficients out on the coffee production equation. That would take several pages. So I do know what the average yield per farmer producing coffee. I haven't got average yield per hectare. Sometimes getting area is harder than I would want to get, because they give me area for the total farm. They don't give me, number of trees or something like that. That's hard to go down to that level. There is we can get data on international coffee prices. I usually use the International Coffee Organization other mile price that contains Rwanda, but getting year by year data for Rwanda on international trade is hard. So I just use other miles for that value.
Yeah, no, this is a really, critical and, persistent question that you're, trying to address here, and a difficult one with, trying to tease that out from these, cross-section surveys, general surveys. So I admire the really hard effort you've put into this. But like I said, this is this question comes up all the time. And in a review I was doing, just to give an example, in a review I was doing last year, looking at, USAID puts a lot of money in technology dissemination, extension, and has been working with a lot of private NGOs on in Africa, such as 1 Acre Fund and TechnoServe and so forth. Now, those organizations report large returns from their extension efforts, and you can look at their annual reports and find, look, they do these surveys, and they find, the people that they're working with seem to be getting higher incomes and higher yields, but there is nothing in there on what happens after their intervention, whether those productivity impacts last, and what's often unstated or understated is that those interventions come with large input subsidies. And we've seen this case, you know, a lot of work has gone into Africa on looking at the impact of input subsidies, whether in fertilizer, in farm credit, subsidies to try to get small, medium enterprises working. And sure, we often can see that while the intervention is there, while the subsidies are in place, you do see changes. But once in the post-project period, when those subsidies are no longer there, the impacts often don't persist. And so this is a perennial problem that I think is really under-researched. Here we have, you know, an attempt to really do a kind of rigorous analysis of it. And it's still, you know, really hard to draw out some conclusions. So just want to, you know, commend you for your efforts on that, Charles, and hope to, you know, see more on this in the future. Now, do we have, is there any other, okay, we have about 10 minutes left. I don't know if there's anything else in the chat that people want to respond to, or if Anwar, would you like to give a brief summary of what Aimable was going to present?
Yeah, I can do that. That's fine.
Okay, why don't we turn it over to Anwar and see if he can give us a little taste of this third case study from Rwanda.
Absolutely. And before I do that, I know Lourdes is asking a lot of great questions about our work, and one sort of specifically to me. So, and this was related to the issue of whether yield and qualitative characteristics are, you know, were they a factor in adoption? So we were looking at sort of these aggregate type of measures, and not sort of, you know, and this wasn't any survey-based work asking farmers their preferences for various varieties. Again, one of the surprising things that, at least for me, was that in spite of a lot of private varieties being registered and released, the adoption levels still remain relatively low in certain areas. So there seems to be a bit of a disconnect there that you know, isn't really explained well. So okay, so I'll just move on quickly. And again, unfortunately, Aimable can't join us. And let me share the screen. So this is work that Aimable has led with colleagues at University of Rwanda, Fidel, and also Dave Weatherspoon has been quite involved in this work as well. Basically, the premise or the motivation of this work was the fact that, you know, Rwanda had this very major policy reform back in the late 2000s related to inputs use and land consolidation, and basically reforming their agriculture sector. And we were interested in understanding, well, what the impacts of these have been over time, using some of the same data sets that Chuck was just referring to, the EICB data. And again, the big thrust of this work was understanding the impact of that policy change. And so the program that we're looking into is called the Crop Intensification Program. Basically, it's a land consolidation program where, you know, you take smaller plots of land, combine them into bigger ones, and give the farmers a lot of inputs to be more productive. So so there's a lot of investments from the government on these facilitating access to inputs and resources. So our interest here was looking at prices of commodities over time, and comparing that across regions where the crop intensification program was more than other regions where it wasn't as much. And then I'll show you a map of the regions where, we characterize certain areas where we find that the CIP program was much more involved in those areas, whereas in other areas it wasn't. So again, we're doing this sort of difference in different type of work, basically understanding whether the prices of food commodities in those areas was different or not. So we have, so we're looking at prices for beans, and we're looking at prices of maize, so maize production and bean production. So this is the graph of the changes before and after the implementation of the land policy, and how those bean prices are different across the two regions, the intensive CIP region and the non-intensive CIP region. And what we find is that in this case, for the case of beans, the non-intensive CIP region, it's higher than the intensive CIP region. So there's something going on in terms of the fact that there was this program and it had an impact on prices. And similarly for maize, where we do have in the intensive region, we find prices to be lower, but those prices were lower to begin with. So the issue becomes whether the CIP had an influence or not. So just to sort of, again, I'm just giving you the gist of of our work. And what we're finding is that the two prices are indeed co-integrated with the non-CIP prices. And there is a slight divergence across the two regions. That the analysis suggests that there are these price gaps between the two. And we so that was the basic objective of our work, to understand the difference in prices, because obviously these the changes in prices will have impacts on how much consumption happens, how much the impacts on nutrition. And I'm sure if Aimable was here, he would talk a little more about the nutritional implications of that. So I'm sorry I had to rush through that, but apologize for the fact that Aimable wasn't here. So,
well, no, thanks very much for stepping in, Anwar, and giving us a sense of what this case study was about. Now, just in this we're out of time here, but I just need one question of clarification, is that the assumption here is that the project increased productivity, which could have contributed to lower prices. Is that right?
Exactly. Yeah.
Okay. And then the second assumption is that there's enough that you could see this in prices because of kind of internal trade barriers, cost of transportation, and so forth. So you would expect regional prices to differ.
That would be what, and then also sort of specialization, and just the fact that they're producing more. So there's a supply shock in some sense.
Yeah, but if the markets are integrated, I mean, those would be, you can trade it across regions if you don't have internal trade barriers, and so you might not see those a supply shock in one region might not affect prices in that region any more than any other region.
Right. So, yes. So there, I guess yeah. So there might be some effect of the efficiency of transportation or trading isn't that great. That's why you're seeing some sort of supply shock. I guess that's one way to interpret it.
Okay, well, interesting work, and our session has we've run out of time, and so I'm going to draw it to a conclusion. But I'd like to give my sincere thanks to all the presenters, and turn it back to the conference organizer. I guess that's Carl. Back to you.
Well, yep. I'll just say thanks also
Thank you.
to Keith and to the group for these presentations, and to Anwar for being our backstopper on two presentations. And so we now have a 15-minute break until 10:45, and then we'll start with a new the next session. Let's see. Anything else that we need to say? Mackenzie or Latha or anybody?
No call. Thank you. Thank you, Keith. Thank you all.
Yeah, I'm good on my end. Yeah, so we'll pause the recording for the next 15 minutes.
Okay, great. Okay, thanks. Have coffee.
So who knows?